Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Algoma steel stock so we can determine if it's a buy or a sell. Algoma Steel manufactures and sells steel products in North America. The company is headquartered in Ontario, Canada, and was founded in 1902. Let's get started with the model. This is a small cap company, 1 billion market cap. They're trading at $10 a share, and they have 100 million shares outstanding. We'll look at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have negative in 2020 and 2021. Their revenue doubled from 2021 to 2022, and their free cash flow blew up to over 1 billion. It did drop a lot in the trailing 12 months to 180 million. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that has a similar trend, negative in 2020 and 2021, really high in 2022, then dropping off in the trailing 12 months. Revenue is the sales for the company, and that grew a lot from 2021 to 2022. It did dip a little in the trailing 12 months. The company's revenue and profits is highly dependent on the price of steel. So if steel prices go up, so do their profits. And if steel prices go down, then so do their profits. And usually the stock price moves with that. Let's look at the capital structure. 1.5 billion of equity, 120 million of debt. They're 92% equity, 8% debt. And they could pay off all the debt with the cash on their balance sheet and still have 124 million of cash left over. They have a WACC of 12%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 3.8 billion. We discounted those numbers back to today using the weighted average cost of capital, and we get a value of the company of $3.4 billion. We divide that by 100 million shares, and we get a calculated stock price of $32. They're trading at $10, so they're trading at a 69% discount. It's a really strong buy according to the model. Simply Wall Street values the company at 49. They're saying it's 80% undervalued. This is where the stock has been trading since they IPO'd. They started out a little over $14 a share. Then after a few weeks, they broke through $15. They never hit 15 again. It did reach the high 14s in March of 2022. Between March and December 2022, the stock really dropped. It fell to a little over $8 a share. Over the next few months, it did break through $12, but then it regressed back to single digits. And when you see a red line, that means the sell orders are higher than the buy orders, and the stock price goes down. The higher the red line, the more sell orders. Same thing with the green line. The higher the green line, the higher the buy orders, and then the stock goes up. There are 17 companies in the same industry as Algoma, and they rank 11th in market cap at 1 billion. The average is 6.6 billion, median is 900 million, and they have great ratios. A price to book below 1.7, so their equity is a lot higher than their market cap. PE of 1.8, which is just ridiculous. Price to free cash flow below 6, and price to sales of 0.3. That means their revenue is triple their market cap. So to summarize, I have them trading at a 69% discount. I rank their free cash flows 4 out of 10, their revenue 6 out of 10, and their ratio 10 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.